Here's Joy, who's in Markham, Ontario. Hello, Joy.
Hello there. Thank you so much for taking my call. David, my question is on Regions Financial. I bought this mainly for the regional banks exposure about a year ago, and all it's been doing is going down. And I just want to know what your take is on this company.
Right.
I'll hang up and listen to you. Thank you.
Joy, clearly, regional banks are not all the same. Some behave better than others. We really like the sector. We are at a time right now where you're in kind of market correction, where lots of stocks are being hit, not just specifically for company-specific issues, but they're getting impacted from a macro perspective on market concerns. So when we start to come out of this correction at some point, leadership in the market will emerge, and it will become clear where the winners are. It doesn't tend to be the weaker stocks within the sectors that come out the other side leading the market. They tend to lag. So as opposed to getting too specific here, why don't you consider using the ETF KRE, which gives you a broad-based basket of regional banks. You're going to get a dividend, you're going to get exposure to the group, but to do a comparison, Regions Financial is trading stronger from a technical perspective than only 40% of the stocks in the S&P. If you look at KRE, KRE is trading stronger than 75% of the stocks in the S&P. So I would prefer to put your exposure there. I think there are strong dynamics for the whole sector. I don't think you have to get too targeted, but very often coming out of a correction, we'll focus on a neighborhood and then get very specific into the granular individual positions as leadership becomes more clear.
There's an interesting chart comparing KRE, which you're recommending, versus Regions, and the ETF has definitely outperformed. Ralph's in Cumberland, Ontario. Go ahead, sir.
Well, thanks for taking my call. David, I've owned Power Corp for a number of years and haven't added in a long time. And I'm just wondering what your thoughts would be in terms of current pricing and perhaps the environment for Power Corp over the next few years, whether this would be a decent time to add some shares. Thank you.
So, Ralph, I mentioned earlier we like the financials group, of course, Power Corp with exposure across that sector. We like the insurance companies a lot. If you were to, again, to use for comparison purposes, look at KIE, which is the ETF for U.S. insurance companies, that group has been remarkably strong technically versus the market. So we like that sector. We own Sun Life as very specific insurance exposure. Power Corp, has been consolidating here. I think it's a great company. It's one you can buy and put away. I like the group. It might not be my very first choice, but it's one that I think you're not going to get hurt with.
Have you held Power Corp or Power Financial off and on over the years?
We've owned it at times, but we've been more specific in our insurance exposure.
Mm-hmm. All right, lots of demand for David today, not surprisingly, as usual. So we'll put a bunch of questions together in the Market Call Minute. We got a tweet from @BuzzLightyear, Chartwell Retirement Residences. What do you think?
Yeah, as far as REITs go, it's behaved okay. We don't have big exposure to the REITs, but this is a time when you can probably buy some dividend yield pretty inexpensively.
Kevin in Toronto called in about Qualcomm.
We like the semiconductor space coming out of this correction. I would prefer to focus on Avago, AVGO, or NVIDIA.
All right, fair enough. Next up, Brett in Edmonton. He called in about a company we don't hear too much about, T. Rowe Price.
Yeah, so they're in the asset management business, very large asset manager. The stock has underperformed the group. I prefer other names within the group.
Speaking of asset management, Barb in Medicine Hat, Alberta, phoned in about Blackstone Group. There was that story the other day that Saudi Arabia has been pulling a lot of money out of Blackstone.
Right, there's been money coming out of a lot of the asset managers. Actually, this is one of those unintended consequences of low energy prices. A lot of the sovereign wealth funds have been pulling money from equity markets to help with domestic issues at home. Blackstone, again, until you start to see an improvement in the market, probably not step into the asset managers.
Do you have any names in asset management?
I would watch for a turn in something like CI in the Canadian market.
Okay.
We'll watch for a turn in the market before we step in.
All right, that's the Market Call Minute. Right after this, we have top picks with David. They're all U.S. Find out what they are after this.